We are happy to present one of the top performing equity schemes of UTI Mutual Fund, UTI Opportunities Fund, which is a sector rotation fund. As the name suggests, the main focus of the fund is to capitalize on the opportunities arising in the market by dynamically responding to the changing Indian economy by moving its investment amongst different sectors as prevailing trends change. While a sector-specific fund runs the risk of having its investments concentrated in a single industry sector, a diversified fund generally invests in a large number of sectors. Sector rotation funds try to strike a balance between the two by attempting to profit through timing a particular industry or an economic cycle. The investments are made predominantly in 3 to 4 sectors which are expected to outperform the broader market. By dynamically altering the portfolio in response to the changing market trends, the sector rotation strategy endeavors to outperform the broader market. It also reduces the degree of risk of a pure sector fund and tries to neutralize the adverse impact of cyclical downturns as well. UTI Opportunities Fund is the right choice for all investors who are looking to supplement their core equity portfolio with a dynamically managed aggressive portfolio. The fund operates with no market capitalization and/or sector constraints. The main reason for investing in UTI Opportunities Fund is its consistent and top-class performance. The fund has maintained its strong performance through different market phases by active portfolio management. We will take you through fund performance in detail over the next few minutes. The performance speaks for itself. The fund maintained its strong performance through 2007. UTI Opportunities Fund ranked amongst top 3 funds in the sector rotation category and outpaced the benchmark returns by a handsome margin. The fund benefited due to its overweight position in industrial manufacturing, financials, and construction sectors, all of which significantly outperformed broader market during 2007. The fund was mostly out of underperforming sectors like information technology and auto during the year. Active use of derivatives to manage volatility and enhance returns also contributed a great deal in sustained outperformance. Despite sharp change in market trend and increased volatility during 2008, UTI Opportunities Fund has managed to deliver consistently superior performance as evident from the table shown here. This illustration reiterates the fact that UTI Opportunities Fund has an impressive track record of outperforming its benchmark through various market phases. UTI Opportunities Fund registered its best ever one-year performance between January 2007 and January 2008. The fund generated returns in excess of 76% during this period. The fund follows a well-defined framework for its investments. At all times, the fund continuously endeavors to search for potential opportunities to create wealth for its investors. For example, recently we reduced exposure to capital goods, industrials, power and financials and added energy, information technology, auto and pharma stocks. The predominant investment style under which the fund operates is growth. The investments are made across market capitalizations. However, with BSE 100 index as the benchmark, the proportion of large cap stocks in the portfolio is always on the higher side. Usually, the portfolio consists of 35 to 40 stocks. Moving on to the scheme features, the allocation to equity and equity-related instruments are more than 90% of the corpus. The investments in debt and money market instruments can be up to a maximum of 10% of the portfolio. As on 31st May 2008, the corpus was Rs 487 crores. The scheme follows a two-step investment process. Through top-down approach, the sectors which are expected to perform better than the broader market are selected first. Subsequently, individual stock selection within each selected sector is done based on growth momentum, valuation, etc. UTI Opportunities Fund has a consistent track record of dividend distribution every year since its launch. In line with the corporate philosophy of consistent dividend distribution, we endeavor to maintain this trend even going forward. The table shows the top 10 holdings of the scheme as on 31st May 2008. The top 10 stocks account for about 41% of total assets. With this, we conclude the presentation and look forward to having each one of you as an investor in UTI Opportunities Fund. Thank you.